Today, we're going to take a look at as many stocks as you want. So put those stocks in the chat and we're going to evaluate if it's a Lambo or if it's a food stamp. And with a market like this, where the 10 is under the 20 and price is under the 50 on the S&P 500, there's not going to be many Lambos. There's going to be lots of food stamps. Now, this is what we call the outlier trend template. And listen, I understand that I've said this before, and I will continue to beat the horse until it's well dead. The 10 going under the 20, price going under the 50 is a bearish trend, right? The last time we saw this was right before the big pullback earlier this year. Now, that doesn't mean that every time it goes under here, we're going to see a 20% sell-off. But every time we see a 20% sell-off, it starts here. It starts here. So what we see today is the start of a bearish trend. Now, at Outlier, we don't call, we don't say, oh, the market's going to go to 500 or buy this stock because it's going to go to $2 or whatever, right? Doesn't matter. All you need to know is where the trend is moving. And the trend can go for a long, long time. So what I want to do today is I want to look at as many stocks as you care to put in the chat. We're going to look at them from our outlier framework. We're going to see if they have buy and sell signals. We're going to look at their outlier 9 over here, and we're going to find, hopefully, some diamonds in the rough, because right now the whole market is looking rough AF. In fact, let's go to the S&P 500 map where there's an internal service error. Okay, never mind. We're not going to go to the S&P 500 map. Professional YouTuber at work here. Let's start with JG wants to look at Nvidia. I heard yesterday, this is a rumor, I can't confirm this, Peter Thiel has a stake in Nvidia and he sold the entirety of it. I know nothing about this, right? This is hearsay. But if I were an investor in Nvidia and I heard that Peter Thiel just sold off Nvidia, I'd be like, oof, I don't love that. I don't love that. Speaking of things that I do love, though, let me turn on the deep thought indicator and turn off a couple of other indicators here. So your charts can look exactly the same as mine. So let me do a couple little edits here because the deep thought indicator is 100% free inside of the Outlier Discord. I want to turn off the age of the order blocks. There we go. Cool. Check it out. So what you see right here is the deep thought indicator. And like I say, it can be exactly yours 100% for free inside of our Discord. But what I see is on Nvidia, the 10 going under the 20, price right at the 50, but it's murderously stacked with order blocks. This is order block city all day, every day. What are order blocks? Order blocks are areas that are of strong support and strong resistance, areas where people are looking to sell or looking to buy. And right now, it's all in betwixt those 2 points. And because of that, Nvidia actually may fart around in this area for a minute, right? It may bounce back and forth for a hot minute. But before we get too deep on this analysis here, let's start at the top, right? Every stock has about 40% of its move due to the market, all right? A stock does not act alone, all right? A rising tide lifts all ships, and a falling tide shows who's swimming naked. Now, the tide of the market is 40% of the move already. So the market has a bullish trend. We're looking at the S&P 500 here. The market has a bullish trend. The market, however, has a sell signal that came last Friday. And all of the market indices have sell signals right now. So if you're trying to buy in this market, you may be disappointed with your results, but you don't have to be if you listen to what we talk about, okay? And then lastly, the breadth. The breadth has fallen hard. What I was looking at earlier was 117 sell signals today versus 14 buy signals. And what I see right here is a bearish cross on breadth. So if you're buying anything right now, you're fighting the trend of the market, you're fighting the market having a sell signal, and you're fighting the fact that we've got way more sell signals than buy signals. All right, so that's just a start. Next, let's go into Nvidia and let's take a look at the sector. So Nvidia is in the tech sector, and what I see right here on the tech sector is not going to help Nvidia at all. What I see is the sector getting less and less greedy and even into the fear. The less and less greedy and getting into fear. We're seeing less and less uptrends in the sector. When it's green like this, that means more uptrends. When it's red like this, it means less downtrends. That's what you want to see. We're seeing the opposite. We're seeing less and less uptrends, more and more downtrends. And then the yellow and green lines right here is the breadth, the same breadth measurement we have here, the number of buy signals versus sell signals on the sector. And you can see right here, the sector is getting more bearish. So 30% is due to the sector, 40% is due to the market. Now, that's 70% of the stock's move before we even get to the stock, right? You want everything working in your favor. The Outlier 9 is there to show you when the market is basically in easy mode, and also to show you when it's not. Now, Christopher earlier, it'll take me too long to find his comment there, but he was saying that he had a huge loss yesterday, and he's like, okay, now I understand the power of the Outlier 9. Yeah, dude. Yeah, absolutely. Do not be buying dips. Do not be looking for value investing. Don't do anything like that. You're only going to get paid when prices are going up. When prices are going down, when the trend is going down, your job is to get out of the way. Your job is to sit in cash and don't F up your portfolio. Okay. Now, you don't have to sit in 0% cash like I did until May this year, and I only learned about it in May this year. And if I had known about it years ago, I'd had an extra zero in my bank account by now. That is a fact. We use a vehicle called SGov. SGov right now is paying around 4.3% annualized APY. And what's really cool about it is it basically puts daily interest into your account. You can watch your account grow every single day while the market's selling off. So pretty sick, pretty sick. Anyways, back to SGov, back to Nvidia. Yeah, this is a food stamp all day, every day. You have 2 of 9. Your trend is still, well, this still needs to be updated here because you got way more outlier blocks, and the trend is actually, as of it may be like a penny or two off. Yeah, it's 4 cents above, so that's why it's not registering as a bearish trend. But yeah, I'm staying as far away from Nvidia as possible. Mikey Mike says, I'm listening and I'm doing. Yeah, not Mark. Rick Warfish, one of our Bravo students, says, can we plot out the Nvidia expected move? On the options? Sure. Give me just a moment here. I need to log into Tradier to do that. It has earnings. Okay, cool. This will be a good example. So you can actually plot the expected move of what a stock is expected to do. Now, it's that much up or that much down, right? And because of that, it really shows you how much volatility there is assigned to a stock by the market makers. It doesn't necessarily mean that it's going to go to A or B. It doesn't necessarily mean it's going to go this high up or this high down. It's just saying that this is the most likely. Oh, come on. Now I need to do an update. Let's see if I can cancel it. Move on. Do I really want to exit? Yes. Okay. The power of being live on the internet. Yeah. Rick, we can try and come back to that. Let's look at another stock. Let's look at Rick saying Nvidia earnings 8% expected move. Oh, well, let's go take a look at that. Okay, it's finally loaded up here. Let's go look at Nvidia. And there we go. So the way that you calculate the expected move for earnings is actually really simple. First, you want to go to the options expiration where earnings are going to take place. So in this case, it's the November 21st. You would price out the at the money straddle. Okay, so the at the money straddle would look like, and you don't do this, you're pricing it out. We're going to price this at the money straddle. So the calls would be $6.55. The puts would be $7.20. Combined, that gets you to a debit of $13.75. Now, the whole price is $13.75, but we don't take the whole price. We actually take 80% of that price. Now, why do we take 80%? It's because the market makers are inflating on purpose because they don't know what's going to happen either. So they're putting an additional uncertainty into the extrinsic value, and that means it's got an $11 expected move either direction. Now, remember, when it comes to options prices, the intrinsic value is the calculation of the current price minus your strike price, and it will always be that for your intrinsic value. The extrinsic value is what can expand over time when there's more volatility, when there's more uncertainty, like at earnings, or it can contract when there is basically less days and less uncertainty before the expiration. So it's only changes in the extrinsic value. So again, it's an $11 expected move either direction. So the way that you would do that is you would take the closing price and you go $11 up, which is a 6% move basically up, or a 6% move down, which would get you right around here. So it could go anywhere from 186, which is where it's at now, up to as high as 197, 198, or as low as 175. Now, again, that doesn't mean it's going to do either of those. It could actually do nothing and move 11 cents versus $11. But this is a way, if you're to build your option strategies around it, how you can measure the expected move. And you can actually do that on any stock for any time frame. In fact, let's do that right now, right? Let's look at SoFi. SoFi Bros. SoFi Bros, right? What is the expected move for SoFi in the next, oh, we'll go with this one here. In the next 45 days, you would take the at the money straddle. So 290 plus 265, 2.9 plus 2.65, which means 555. Take 80% of that. 444. I love these lucky numbers over here. Let's go. 444. And we would say SoFi could go up $4 or down $4. Now, SoFi bros understand that SoFi only goes up. So 444 up is basically where it's going to go. So it's going to go to $31.46, period, full stop. Just plan on it. Go ahead and mortgage your house because SoFi is going up to the moon, $4.44. There's absolutely no way that it can go down $4.44. No. Of course not. Of course not. Where's $4.44? Right there. 16% down. No, SoFi can't do that. It only goes up. Now, I'm being sarcastic. Don't listen to anything I'm saying. I'm just a random guy on the internet. But since we're talking about SoFi, it is also in a bearish trend, right? Now, that's over 45 days. And so, like I say, you can get an idea of the volatility of any stock over any time frame. So going back to SoFi, SoFi bros forever, SoFi bros for life. Let's go look at SoFi inside of Outlier. SoFi bros unite. Oh, Don has a great question. Is there a category for ETFs in the US Investing Championship? So what's cool about that, Don, is the different categories. There's a stock only, and I'm pretty sure that ETFs would fall in the stock only. Or there's the options and enhanced growth division, which is where I'm going to be playing next year in 2026. Actually, I just talked to Mahesh yesterday. He was going to give me $30,000 to invest. And then yesterday, he's like, we're just going to bump it up to 50. And I was like, oh, okay, cool, whatever. I don't care. And that's the thing. When you have a plan, you don't care how much it is. I literally told him, I was like, listen, I'm going to do the same thing if you give me 20,000 or if you give me 100,000 to invest. It doesn't matter to me. 20,000 is honestly like the lowest amount that you can position size correctly with. But I'm going to be running into the US Investing Championship with the Outlier fund being $50,000. Let's go. Let's do this thing right now. I am planning to be so here's my conflict, right? I want to say that I'm going to win the US Investing Championship. But here's the deal. I don't want to win. I want you guys to win. I want you guys to enter into the US Investing Championship. And I want to see how many of you beat me in the US Investing Championship. But we need you when you go register, which is really funny because Outlier is 82 cents a day. The US Investing Championship cost is $425. So the US Investing Championship entry fee is actually more than the software to help you win the US Investing Championship. What? Okay. Anyways, you need to make sure you put your name and then put Outlier as like your association in there. And once I do it, once the account's funded, and trust me, it's taking longer than I wanted, but once it's funded, I'll do like a screenshot to show you guys exactly how to do so as well. And we will dominate the US Investing Championship. That's the way I'm looking at it. So SoFi bros unite. SoFi looks like total dog doo-doo. Oh my goodness. It does have some order blocks here that could help it out, which is why it's got 1 of 9. Listen, SoFi bros, here's the deal. Here's the deal. It looks terrible. Why does it look so terrible? First, the market. The market looks awful right now. Your trend, your signal, and the breadth are all looking terrible. The sector is getting less and less greedy, pushing towards fear. It's got a bearish crossover and the number of buy signals. It's getting more downtrends, less uptrends. The stock itself is getting more fearful, less greedy. It is now inside of a bearish trend. Oh, look at that. Look at that. It lit up. Thanks, Deep Thought, for building that into it. The 10 under the 20 right there. Oh, that is really cool. It did it all on its own. What else? The trend is down. The signal is down. The signal is a sell signal. The fear and greed is going down. The only thing it has for it is there's no overhead order blocks on here, right? SoFi looks like you could be saying goodbye. Say goodbye to SoFi. Hey, like that. Say goodbye to SoFi. Papa Galapagos says SoFi is going to drop huge as I see. Dublin Capital is telling you guys what to do. I'm not going to do it. I mean, I'm not going to tell you what to do, but Dublin Capital is going to tell you what to do. We all owe him a debt of gratitude, my friend. Yeah. So let me answer a couple of questions before we look at a few more stocks here. Goody, the skater, Goody, put this at 1:16 a.m. Goody got up early to write this question. What's up, Chris? Yesterday's Tesla, so we'll look at Tesla. Daily was bearish, 10 under 20, price under 50. All right, let's go look at Tesla real quick. Tesla. Hell yeah, it's bearish, 10 under 20, price under 50. All right, so let's go look at Tesla. Let's see how much sea of wed there is under their Outlier 9 sea of wed. Yeah, you've got 1 of 9 here. You don't have any overhead order blocks within 2%. You've got a bunch of room right there. So Tesla looks like dog doo-doo as well. Tesla's daily was bearish. We can all agree to that, right? We all agree to this, right? 10 under 20, price under 50. That's your outlier trend template. It's bearish. But on the 5-minute, everything flipped bullish. Okay. You guys answer Goody's question. He has a few more questions on here, follow-up questions. But if Goody's looking at the daily chart to base his trades on, and then he's looking at the 5-minute chart, what would you say to that? What would you tell Goody? And this is not a criticism, but if you're looking on the daily chart, if you're looking to place your trades on a daily chart, if you're looking at Outlier, which is on daily information, looking deeper inside of this is noise. Noise. It's not going to help you if you are only trading daily charts to look at the 5-minute. Stick to the daily chart. If that's what your plan is centered around on the daily charts, don't even worry about the 5-minute chart. Dublin Capital. Does your plan trade the daily or the 5-minute chart? I agree with him completely. Be consistent. That's precisely what I'm trying to get at, right? If you are looking for a daily trade time frame, then you really don't need to look at the 5-minute charts, because it's just going to do exactly what it did right here, which is drive confusion. Made about an $18 to $25 intraday run. The premium was around $25 for a deep in the money contract. Okay, so he says he would have made, 60 to 80% return. That's great if that's your plan. I didn't take the trade. I was acting as if I were paper trading using Robinhood. Okay. My question is, when the daily is bearish, but the intraday trend is clean, should I take the intraday setup while paper trading? Avoid it since the daily doesn't agree. Okay. My answer is come up with your plan and trade that plan. You can have multiple plans. You can have a 5-minute plan where you trade all the 5-minute stocks. You can have a daily plan where you trade all the daily stocks, right? You can trade the same stock multiple different ways. But again, whatever your plan is, it needs to be on one time frame. I know that sounds crazy, but you're going to see bullish trends inside of bearish trends because the market's fractal, right? Let's zoom out slightly. Let's do this together. Let's go to monthly candles. Monthly candles on Tesla, I see a bullish trend. But if I zoom into weekly candles on Tesla, I see a weakening bullish trend. If I go to daily candles on Tesla, I see a bearish trend. If I go to the 1-hour candle on Tesla, I see a bearish trend. If I go to the 15-minute chart on Tesla, I see a bearish trend. If I go to the 5-minute chart on Tesla, I see a bearish trend. And honestly, you got to figure out what works for you and keep it on one time frame. Time frames are mutually exclusive. I like that, Anthony. Why? Why are they mutually exclusive? Because if your position sizing needs to be based on that time frame, the ATR changes. The ATR, which is how we work on position sizing, changes because it's the volatility, right? The volatility on a 5-minute chart may be only a few cents. The volatility on a daily chart may be a few dollars. The volatility on a monthly chart may be a few dozen dollars. Your job here is to find one time frame to work on and stay on that time frame. Does that mean it's the greatest time frame ever? Maybe, or maybe not. Maybe not, right? you're not trying to be perfect. You're trying to find positive expectancy and then run that as much as you can. Run that as much as you can. Speaking of running things as much as we can, continue to put your stocks in the chat. I want to look at, let's look at AMD, and we're going to go to the daily chart. Okay, so check this out. So we're looking at AMD on the 5-minute chart, and then we're going to zoom out to the daily chart, and it's going to look a bit different, right? Still not quite in a bearish downtrend just yet. Now, AMD, the 10 is still above the 20, price is still above the 50. That means AMD actually is one of the best stocks we've seen so far because it is still in a bullish trend. Once the 10 goes under the 20 and price under the 50, that is a bearish trend. But we don't have that yet. We do have a sell signal. The tech sector is the same as it was on Nvidia. Any outlier blocks? So you got a little bit of outlier blocks coming in over here. But the trend is still bullish on this, even though you got sell signals, right? AMD is the most Lambo of anything that we've seen so far. AMD is the most Lambo. Again, in the chat, tell me some stocks that you want to look at. I'm scrolling. PSX. Pedro Eddie wants to look at PSX. This is ConocoPhillips, right? It is Phillips 66. I was close. Phillips 66. We're in the energy sector. So the market's not working for you. However, the sector is looking really sharp and the stock is looking really sharp. This is not bad at all. Check this out, right? You got a buy signal. It came on October 27th. You're already in an uptrend. It's getting more and more greedy. The sector is getting more and more greedy. The sector is getting more and more uptrends, more and more buy signals. This is what you want to see. Now, keep in mind, you don't want to bet against the market. You don't want to bet against the market because right now the market is absolutely showing bearish trends. And even though this stock is doing great right here, it's not 100% that we need that we want to see. It's only 30%, 30%, 60%. So you could do really, really well on PSX, but it may or may not work in a bearish market environment. KSTP has a great question. Do you start buying puts with the crossing? For me personally, Outlier only has buy and sell signals on long only setups. Because of that, I'm only taking long calls right now. And if I'm not trading it, I'm going to sit in cash and don't F up my portfolio. However, the short signals are in R&D at Outlier. I can't give you an idea of when that's going to be ready, but when it is ready, we will develop a full comprehensive trading plan and we will trade the mess out of that when it comes. So in the meantime, just doing our best to stay out of the way of the market. Gas Trader says, I'll wait to buy the ticker Outlier to get back in. I like that ticker. That's a decent ticker. How about, let's look at Dublin Capital wants to look at a handful of stocks. Well, I can't go through all of these, my friend, right? I got to spread the love, but we'll look at a handful of them. Let's look at NVO. First off, this is a healthcare sector. Screw healthcare. Healthcare is off my books forever, permanently. Oh my goodness. What in the wide world of sports would you even be looking at NVO for? No, seriously. I mean, in what world, and this is me giving you some little bit of love, in what world would you want to buy a stock that has been monkey hammered to death? This stock is the epitome of what it looks like to get a sell signal inside of a downtrend and just watch the price evaporate. Holy goodness, right? Even though you've got bullish breadth on the sector, more buy signals here. We're looking at a sector that is getting less greedy, right? It peaked on greed, it's pulling back in. But the stock, goodness gravy, right? You're not going to get paid on a stock like this. So nothing personal, but dude, I would stay as far away from this as possible. So I'm actually really glad you brought it up so I could give you a little bit of my perspective. Let's go to a different one. Hopefully this is a little bit stronger. XOM. This is ExxonMobil in the energy sector. We already talked about how the energy sector is strong. See the difference here? Do you see that? Surely you see the difference here. Type in number one if you can see the difference between NVO and XOM right off the bat, right? One of these actually has the fear and greed growing. It has a bullish trend. Everything is looking beautiful. It even has a buy signal. The other one has a sell signal and a big nasty downtrend. And it's just basically saying, if you hate money, please buy NVO. That's what it's saying. If you want to take your money and set it on fire, NVO is a great place to do so. Okay. So, but ExxonMobil looks a lot better. Hey, Dublin Capital, I want you to know I really appreciate you letting me rag on you a little bit, my friend. I love you. I wouldn't do it if I didn't love you. Let's look at NEE. This is in the utility sector. I've traded NEE before. All right. So the utility sector, actually, the utility sector is looking really, really strong, right? It is coming down on the fear and greed. This stock, however, looking great with a buy signal, with a bullish trend, getting more greedy. The sector itself had been getting stronger and stronger with more and more uptrends, but it did cross, maybe not quite crossed under on breadth right here. But I mean, this one looks a lot better than NVO. I'll give you another one. GNRC. GNRC. And you know what's cool about this, right? I'm basically demoing the Outlier platform for you, but you can see exactly everything that I'm showing you right now, and you can have the awareness of what you want to see, right? Right here, this pink overlay shows you if it's in a bearish trend. A green overlay shows you if it's in a bullish trend. That easy. The sell signal right here inside of a bearish trend, getting less and less greedy, more and more fearful. The sector, right? This is the industrial sector, getting less and less greedy, more and more fearful. Looking down here, you've got a bearish crossover on breadth, meaning more and more sell signals. And because all of this gray right here, that means less and less uptrends, more and more downtrends, right? So with just a glance, you can see the Outlier 9 has 1 of 9 because it doesn't have any outlier blocks on top of it, but everything else looks terrible. This looks like a really bad, no good, very bad stock. This is way more of a shorting opportunity for me than going long. Let's do one more for Dublin Capital. Let's go look at Target, right? Now, everything that you see right here, the full package, 82 cents a day. And you get access to our Discord. You're going to get access to all of my trades that I put in for the US Investing Championship. You're going to get access to Outlier University. Wait a minute. Did somebody say Outlier University?
Are you ready? Let's go!
Respect is earned. Respect is never given.
That's right. Outlier University is happening right now. Bravo class unite. Right? We've had our alpha class come through. Now we're working on the Bravo class right now. A group of 9 students who actually attend class live, 9 outliers who attend class live. And by doing so, we are going to change their lives, right? Now, all 9 of these students have actually traded before, so it makes things a little bit easier. But if you've never traded before, Outlier University is for you. If you have traded in the past and you haven't found success, Outlier University is for you. And the best part about Outlier University is it is free. It's free 99. It is included as part of the Outlier platform. Like I say, it's 82 cents a day, gives you everything. You can watch it live, or you can watch the replays on YouTube that are going to last forever for free. And people charge $12,000 or more to give you everything that I'm going to give you for free. There's no masterclass, there's no upsell. Everything is included and will live on YouTube forever for free. And Stiller has a great question. Do you post your trades in the trading room? Yeah, absolutely. We're not going to change anything about that, right? Every trade that I put on goes into, and I'll even show you. Every trade that I put on goes into the Outlier trading room, part of our Discord, and you can see my trades for years in here, literally years going back, right? And nothing will change about that when we get into the US Investing Championship next year. So again, Outlier University happens Tuesdays and Thursdays, and it's definitely happening today. Let's do another stock. Free 99 is my favorite price. That's right. Bravo class assemble. Bravo class. Let's see 3 Bravos, 4 Bravos right there, 5 Bravos. Good to see y'all, all of y'all here. Okay, let's see. I want to look for another stock in the chat. Looking for another stock in the chat. Falcon says, I subscribe. You're a smart boy. OLED. Is that a stock? I thought y'all were talking about light bulbs. I thought y'all were talking about TVs. OLED. Let's go look at the OLED stock. All right. Oosh. OLED. Ugh. 1 of 9. Hopefully he's buying puts on OLED. I don't know. This looks awful. This is no good, terrible, very bad. Sell signal came before the trend change. Look at that. Before the trend change, the sell signal came, fell off a cliff, started around 146. Now it's down to, 110. Goodness gravy. That is the stock you don't want to be owning right here. Again, bearish breadth, bearish fear and greed. Stock is getting fearful AF, moving down like a train right here. This is a stock I would not want to get in the way of, right? Now, here's the thing. We don't know. We cannot tell which direction the market's going to go, but we can look at the trends. We can look at the price data and everything that goes into Outlier. I can't give you the secret sauce, but I'll put it to you this way. It looks at news, it looks at price data, it looks at investor sentiment. And what it does is it tries to find areas of extreme fear and extreme greed, allowing you to find those areas as well and get in before the outlier move happens. So exactly right here, the outlier move happened with that sell signal. Goodbye. And there it goes down. Let's look at another one. LEU. LEU. Let's look at LEU. Good sector. What sector is this? Oh, energy sector. Okay, what is LEU? Centrus Energy Corp. LEU makes total sense. Yeah, I love when I find a stock ticker that's like, what the hell has that got to do with Centrus Energy Corp? Okay, sounds cool. But again, sell signal came October 24th when it was around $400-ish a share, and it's now down at $2. Oh my gosh, hang on. LEU. Holy goodness. Sell signal came on October 24th. Right here, and it was around 380-ish a share, and now it's down at 245 a share just that fast. Wow, 37% sell-off right after that sell signal. That's what I'm talking about, right? We're trying to give you the information you need to make a smart choice so you aren't watching it go all the way down. Now, this looks like it pulled. What did it do in the chat? What do you see on here? Because I see something. Anybody else see something on here? What do you see? Like this is the kind of information. This is the kind of information that I teach every single day. You tell me. Tell me. Brian with the gold star. I see a market cycle. I see DeHammer with a market cycle. VacLab says he sees a market cycle. Dr. J prescribed a market cycle right here. Yeah, let's talk about what the market cycle is real quick. I always say that you could publish the rules in a newspaper and nobody follows because of consistency and discipline. Let's go look at the market cycle, right? This is what the market cycle looks like. So remember the last time you went to the optometrist? Oh, well, I mean, I'm one of those guys who's been the optometrist a couple of times because I've been wearing glasses since 5th grade. Okay. So when I go to the optometrist, they have two different things going on, right? And they're switching between the two images, right? You got your letterboard on the wall. And then he's got that giant round thing, right? And he's like, okay, is it better 1 or 2? 1 or 2? Sometimes it's obvious AF. And you're like, clearly number 2. Why are we even making this discussion here? Number 1 is terrible. But then there's times like this where the doctor's like, okay, tell me the difference. What do you see? Number 1 or 2? 1 or 2? Which one looks better? Hang on, let me align this just a little bit better. Number 1 or 2? 1 or 2? Better, worse, or the same? They're the same. They're the same. Senior Wahoo, 1 or 2? They are the same. Right? Here's your stage 1. Your stage 1 is the consolidation before the big move. Stage 2 is the big, beautiful upturn that everybody's trying to get, right? This is where your brother-in-law is so excited because he found the stock. This happened to me. My brother-in-law bought Moderna in 2020 during COVID. And I remember specifically, I was like, oh man, good for you. Tell me about this. How'd you find it? He's like, I don't know. I just found a random guy it wasn't this random guy. I just found a random guy on the internet talking about how you should buy Moderna stock because it's going up. Guess what he didn't do? Guess what he didn't do? He didn't sell in stage 3. Stage 3 is at the top. Stage 3 is where the moving averages start crossing over. Stage 3 looks like SPY. We'll come back to LEU in a moment. Stage 3 looks like this, where you've got your moving averages crossing over, and you've got a little indicator right there that says, hey, plan M exit point. This look out below type of situation right here. Oof, that's stage 3. Stage 4 is where LEU is at right now. LEU. Right? Stage 3 happened back here. Stage 3 happened right here when that sell signal came through on October 24th. That was your big, red, nasty, get out of the way warning light right there. October 24th. Then it fell 37% right there in its stage 4. So this is what I'm trying to tell you. The 10 went over the 20, price went over the 50 right here. It had a 131% up move. LEU did. 131% up move. And then so far, 50% of that is gone. 50% of your investment is gone. And it's very close to being 100% back to where it started from. So also the math, let's talk about the math right there, right? 131% up move only takes a 56% decline to evaporate. Only a 56% decline to evaporate. Pretty crazy, right? Brian says, you always got to pick number 2. And you know what else, Brian? You always got to save time, make money, and start winning with less risk by clicking one of these 2 videos, and have a fantastic day. We'll talk soon.